it's not just about Forex. Everything is going to move today, and it's going to be very, very important to understand what those movements are. So what we're going to do is we're going to start off by talking about, I'm going to share my screen. Give me a second, okay? I'm going to share my screen. Let's see if I can find the image that I want to share with you. Here we are. Okay. So let me just move some things around. Bear with me, and then I'm going to share with you my screen. Where did my Twitter go? There it is. Okay. All right. Okay. Sharing my screen right now. Wonderful. You guys are trading euro dollar, gold, pound yen. That's one of the things I won't be trading, but we can talk about that as well. Indices, coffee. Okay. I won't be trading coffee, but we can talk about that. All right. Here we go. So today's the FOMC rate decision. First off, I apologize. This is from December. So the GMT time is 18 GMT, not 19. But, I looked for this quickly instead of the one that I could find. I don't think I could find another one. Let's see. Oh, right here. This is the right one. So this was the FOMC breakdown for September of last year. So pretty much the exact same rundown for today, because GMT time, Eastern time, New York time is the same. So at 2 o'clock, we are going to get the Fed statement. And in the Fed statement is this decision, how much they are going to cut interest rates. At the same time, the headlines will come in. You will get the economic projections, which is what they think interest rates will be, what they think the GDP will be, what they think inflation will be, and what they think the unemployment rate will be by the end of this year, next year, and 2027. And then we will also, at the same time, at 2 o'clock, get the dot plot. And I'll explain that in a minute. And then at 2:30, we have the Fed press conference and the Q&A. So this is the breakdown of what's going to happen on FOMC day. Now, of course, we have more than that happening today. For whatever reason, okay, let me put my calendar back up. We have the bank. First of all, we have housing starts and building permits coming out at 8:30 this morning. And housing data these days has taken on a lot less importance. So this is not going to move markets at all. But at 9:45, we have the Bank of Canada interest rate decision. So we have the Bank of Canada interest rate decision. Look here, 25 basis point rate cut expected. And the opportunity, will be some movements in dollar CAD, but the real opportunity for the caddy is probably going to be in the crosses, because the dollar, for the most part, is going to be frozen against most of the major currencies until the 2 o'clock FOMC meeting. So for those of you, who's trading CAD? Do you guys care about CAD at all, or you just want to care about the Fed? Do you want me to talk about CAD? Say yes, say no. Otherwise, we're just going to focus on the Fed. I want this to be a valuable session to you and interactive, so make sure you answer my questions and chime in. Do you care about the Bank of Canada? Or you just want to talk the Fed? All right, go ahead. All right, we've got time. I have till 8:30, which will zip right by, believe it or not. Bank of Canada rate decision, 25 basis point expected. So let me share with you my process. When it comes to fundamentals, what we do, and I wonder if I can pull up my fundamental checklist here. I'm pretty sure that I can. Let me just show you my fundamental checklist so that you can kind of practice this exercise when you are going through everything. Let's see, where is my checklist? Here it is. Got it. One second. I'm just going to load up my checklist, And we're going to walk through my checklist. And this applies to everything that we, any day and everything that we trade. So whenever I start my day, I always look at economic data and news. I always look to see whether or not there's any big stories that I'm missing. And so the first thing that I do, and the easiest for all of you to do, is just check the major news media, CNBC.com, anything that we should know. Mortgage refinance spikes nearly 60% as interest rate drops. I mean, this is kind of interesting to talk about, which is that mortgage rates have dropped to a 3-year low ahead of the Fed meeting. Mortgage rates got to 6%, 7% for most people over the past year. And if the Fed is expected to cut as much as 100 basis points, not today, but over the course of the next 6 to 8 months, interest rates will continue to fall. And one of the biggest benefits of rate cuts is the housing market. That's really what they hope to prop up. That's really what they hope to invigorate. But that's something we talk about after FOMC, maybe tomorrow for BK members or Monday for the rest of us. So we know Fed set to cut rates, but forecast for the rest of 2025 is key, with politics clouding the picture. And we're going to talk about this. But right now, it seems like you're not missing anything aside from the whole story with NVIDIA and TikTok, but that's separate. NVIDIA, if you haven't heard, which I think is very, very interesting, but we'll talk about this in a second, which is Dow, S&P, and NASDAQ holding near highs as Treasury yields steady as traders wait for the Fed cut. Okay, nothing that you're missing there. NVIDIA shares slipped to a 1-month low as a report says China has banned its chips. And then Oracle investors are eager for a TikTok deal. I mean, this is really the other big news that we have today. And I just want to spend 1 second talking about it because the US and China are still involved in a trade deal, right? Trying to negotiate the tariffs and things like that. Even when we get past the Fed, the whole tariff story is still a big one. And the fact that China is stepping in and first of all, they're agreeing to TikTok deal, which seems positive. But then at the same time, NVIDIA, they're banning NVIDIA chips, which seems to be a negative in terms of how the negotiations and the relationship between the US and China is going. So I just want you all to keep this in the back of your minds. Things may not be going as well as we hope between the negotiations between US and China as suggested by what they're doing with NVIDIA. And so something just important to keep in the back of your mind, doesn't affect what's going on today, but as part of my process every single day, I check the news, just check the big mainstream media, and then I check the data. So we know yesterday, we had really, really good retail sales numbers. So yesterday, we had hot retail sales numbers. And those retail sales numbers were so strong, they came out 3 times stronger than expected. And that actually helped drive the euro lower, drive dollar CAD higher, drive dollar Swiss lower. It's single-handedly the main reason why we have some profit taking on short dollar positions this morning. BK traders, actually, I live traded. I gave retail sales with our BK traders. And basically, even though what's really interesting is that even though the dollar's up today, even though we had really strong retail sales numbers, we actually faded the move. We sold dollar yen into the retail sales report. Let me show you what we were looking at yesterday. So yesterday, this was retail sales right here. So yesterday, this was retail sales. And the number's hot, you're thinking you should buy. And dollar should rally. And yet it moves a little bit and then it collapses. And a lot of times traders are confused that why is the price not responding to the data? And that is why it is so important to put context, everything into context. And that is why it's so important to talk about what is the sentiment in the markets. And that is what we're doing today. And that is what is important to understand. Just because the data surprises, what is really key is how it plays into what the market is thinking. And this is so important today. And I'm going to explain this more, because the reaction that you expect from the Fed today may not be the reaction that happens because of the current sentiment in the market. And a perfect example of this was yesterday when we had the retail sales report. You think the data is good. It should drive the dollar higher. But instead, what happens? It pops a little bit and it drops, and we actually sold it, riding a small part of this move, but part of this move lower. And live trading these events is part of learning how to understand how these things work. I promised I would talk about Canada, but we talked about a bunch of other stuff instead. But part of the process, as I said, is we look at data. So we look at we had retail sales yesterday, was really good. Should be good for the dollar, but not so much. Thank you, Joji, for that $2 super sticker. I appreciate it. And you know what? I'm going to donate those. While I could buy myself a cup of coffee, I'm going to donate those $2 and make your money work for some, people who need it more than I do. But thank you so much. I really appreciate it. So New Zealand, and I'm going to double the donation. $2 is very small. I'm going to match your donation. Anyway, New Zealand data was weaker, okay? But New Zealand data was better than expected. Important to remember for Canada. And then this morning, what do we have? We had UK inflation data, which was weaker than expected. And we had Eurozone inflation data, which was revised lower. So taking a step back, with stronger New Zealand data, we had weaker Eurozone data, we had weaker UK data. So I talked about how should you trade the Bank of Canada rate decision. So step number 2 was we looked at data. Now we look at what sentiment in the market is. This is a little bit more relevant for if we're trading the majors, the dollar pairs, but I think it's also important to keep this in mind because this will be important for the Fed trades. So then we take a look at how the market is doing. We look at how stocks are doing. So stock futures are actually, they're mixed, flat to mostly down, I would say. And ES is down, pulling back, but still hovering near record highs. Treasury yields are down quite a bit, but it's also important to understand the treasury yields are at the lower right-hand corner of the chart. And gold is down quite a bit. And profit taking in gold. And this is actually what I posted on my, I don't want to get rid of that quite yet. For those of you that watched my video on, I posted it everywhere, but I basically said US retail sales surprise, best trade gold profit taking into FOMC. So that is, something that's exactly what happened. Fed relief, maybe dollar stocks barely reacted. The best trade is gold profit taking into FOMC. And gold is moving lower into FOMC. And then the dollar itself, the dollar is up against the euro. Look at my watch list here. The dollar is up against the euro. It's down against the yen, up against CAD, Swiss franc, flat against the pound. So basically up against everything except for dollar yen. So it's important to be aligned with the overall market sentiment. And so you can see CAD is down. CAD is down. We are at the bottom of this overall range, which is actually quite good because we're at the bottom of this overall range. And I'm going to bring in my moving averages because I really love them. We may be at the bottom of the overnight range, but we are below all of the major moving averages, which I think is quite significant. So Bank of Canada is at 945. Dollar CAD is not a trade. It'll move for sure, but really the dollar is frozen going into the FOMC rate decision. So what are the trades? Well, let's take a look at some of the opportunities that we may have. One of the trades is before we talk about it, let's talk about what the Bank of Canada could do. All right. So there's a couple of options. So Bank of Canada, the market is expecting 25 basis points. All right. So the obvious, if there's no change, the Canadian dollar will soar. What will the Canadian dollar soar against? The Canadian dollar will probably, the best trade in my opinion is Aussie CAD because we're below the shorter term moving average. Australia still plans to plow forward with interest rate cuts. Aussie CAD is already weak, whereas Kiwi CAD is not so weak. The other one that's a really great trade is Euro CAD. Euro CAD is also a really great trade if we get no change from the Bank of Canada. Now, that's probably not going to happen. They're probably going to cut interest rates. So if we get no change, the game plan is I like selling Euro CAD or Aussie CAD. Now, what if we get that 25 basis point rate cut that is expected? Well, it's not so much about the 25 basis point rate cut. It's about the 25 basis point rate cut and the guidance, what the BOC says, Bank of Canada says and suggests at 10 a.m. So if we get to 25 basis points and done, which means wishy-washiness, then still, I think the EuroCAD Aussie CAD trade is the best. If we get, where's my mouse? If we get 25 basis points and some sort of cautious comments, meaning like because data in Canada really deteriorated. For those of you that joined me, so this is BOE. But for those of you that joined me from, let me see if I can pull up the table. From Monday, I'm going to pull up the table real quick. Where's my Monday downloads? Where's the BOC? Let's see. There we go. So this is the BOC rate decision. From Monday, you can see pretty much a sea of red. Retail sales weekend, job growth, gave up pretty much all the jobs previously. Inflation down, lots of stuff that's been negative. So if they are cautious, then my favorite trade is going to be what one of our friends talked about, which is short CAD yen. And let's see, where's CAD yen? I really like the short CAD yen trade, but CAD yen will also be, CAD yen will also be a little precarious, but I do like the short CAD yen trade going into it. And I also think that because this is happening right a few hours before the Federal Reserve rate decision and the dollar is trading higher today, I think you'll have some opportunity in dollar CAD. So that's the Bank of Canada for those of you that want to talk about the Bank of Canada. Now, let's talk about the Federal Reserve. So first off, let's get back into the zone of the Federal Reserve. So we know that we have it's a two-pronged rate decision where we have the Federal Reserve rate decision, how much they cut interest rates at 2 o'clock. Then we have the economic projections coming up at 2. The economic projections will be coming up at 2 o'clock. And then the dot plot. And then at 2:30 with the press conference and the Q&A. So what will happen is that between 2 to about 2:15, probably from between 2 to 2:10, we'll get the initial reaction to these three things that we have here. How much they cut interest rates, how they change the economic projections, and what the dot plot looks like. Then there'll be a little bit of profit taking between 2:15 and 2:30 as traders try to figure out whether Fed Powell is going to say the same thing as what the dot plot and economic projections suggest. And then at about 2:45 is when 2:45, 2:50 is when everything important he's going to say is probably said already, and all the important questions that are going to be asked by the press will be asked. So by 2:45, 2:50, we will know the quote unquote main takeaway from from Powell, the message that he wants to give us, whether he's laying the stage for a series of aggressive interest rate cuts or whether he is still going to sound wishy-washy. Now, in terms of the FOMC rate decision, this is a unique one where we have a brand new member, Steve Murin. So Steve Murin was just confirmed, and he will be joining to vote at the Fed meeting today without having seen any of the previous information, without having voted at any of the previous meetings this year. So he's going to be casting his first vote, probably based upon his opinions, just his general opinions, not set on data. So I want to know, if you're paying attention, what do you think Steve Murin is going to vote for? Is he going to vote for no change, 25 basis point rate cut, or 50 basis point rate cut? Pop quiz, what do you think he's going to vote for? Glad to be here says maybe 50 basis points. Peter says maybe 50. Kaban says maybe 50. Oh, look at you. Look at this. Many of you are maybe you have the same opinion, which is that he's probably, actually some of them you think he's voting for 25. I mean, it could go either way, right? Regardless, he's voting for a rate cut because, he is appointed by Trump or nominated by Trump. He has said he favors looser monetary policy, and he has said that in the past, he believes that the tariffs are not inflationary. So he's, a dove. Trump nominated him because he expects big things from him, meaning big rate cuts. I love this, Gabriel. He will deport him if he doesn't cut interest rates. I think regardless of which way you lean, I think we could all get a chuckle from that. I really love that. So yes, he's going to be voting for a rate cut. No question about that. But the real question today is not so much how much the Fed cuts, because I think all of you will agree that the market thinks the Fed is cutting 25 basis points. We have this CME Fed Fund Futures. Let me just refresh this. We always look at what is priced in, right? And we know 100%. Right now, the interest rate, if you need to be reminded, is at 4.25% to 4.5%. So market's pricing in a 100% chance that we're going to be at least 4%, and a tiny, tiny chance that we're going to be at 3.75%. So clearly here, the market is, no one think, okay, 6% of the people, very few people think that the Fed is going to cut by 50 basis points. But just because they don't cut by 50 basis points does not mean that there will not be members of the Fed who do not vote for 50 basis points. Remember, and you may not remember, I'm going to pop quiz you again, Tim, because I love your interaction. Who remembers how many Fed presidents voted for 50 basis points at the June meeting or at the last meeting in July? In July, we had members vote in favor of 50 basis points, and the Fed did nothing. How many voted in 50 basis points? Where are you? Where are you, Howard? I know you know Howard. Howard. Okay, it's fine. Ephraim, you were paying attention. Very, very good. Two members voted in July for 50 basis points. So 2 members voted in July for 50 basis points. So, and they did nothing. That means that today it's not about whether they cut or not cut. And it's perfectly fine. Glad to be here. You can be confused. If it's about how many today vote for 50 basis points, even if the Fed cuts by only 25. So the first thing that we're going to be looking for our Federal Reserve game plan today is, number one, of course it will be how big of a rate cut. Now, of course, if they surprise by 50 basis points, that's going to be easy. That's going to be widely negative. If they cut by 50 basis points, it's going to be very, very bearish dollars. And it's going to be very good for stocks. And it's going to be very good for gold. But the real, more realistic question is, how many voted for 50 basis points while the Fed still only did 25? We know at the last meeting, let's get a line here, 2 voted for 50. I believe it's 2. If we get, and I'm almost certain because I have my notes here, and I did my homework for you. If we get 2, it'll probably still be a little dollar negative. If we get 3 who voted for 50 or 4, that's going to be very dollar negative, positive for gold, and positive for stocks. So this is the second thing that we are looking for, which is number one, how big is the interest rate cut? Number 2, how many voted for 50 basis point move? We know that Lisa Cook, who is still holding to her onto her job. She's made progress in her lawsuit against Trump. I mean, come on, my friends. How many do you think she's going to vote for? 25, 0, 25, or 50? How many rate cuts do you think Lisa Cook is going to vote for? And so most of you are saying nothing, but I'm going to answer your question because we need to move forward. Maybe she's going to give it to him and say none. But if she's, truly ethical and she reacts to the economy, it's just going to be 25. But it's just entertaining to ask you this question, because if some of you were her, you'd probably give it to him and vote for 0, like Gloria, right? But I think she's going to vote for 25. The thing is that we don't really know. And that's really the key, which is that she's probably going to vote for 25. I'm going to take the neutral stance, neutral political. And Tony says that she's going to vote for a rate hike. She would really lose her job, and that would give him ammo to kick her out. But the thing is that they don't know. They don't know, because this is where we're going to talk about the dot plot. All right. How many of you want me to explain the dot plot, which is the third thing that you have to watch for? Dot plot. How do we understand the dot plot? Who wants to know? If you don't need me to explain the dot plot, I'm just going to talk about what is expected. But if you do, give me a question mark. Let me explain to you what the dot plot is. I love this because I love how you guys are giving me the opportunity to talk about what I love the most. All right, Fed forecast. The reason why this Federal Reserve rate decision is so important is because, first off, Federal Reserve, our best friend Google, okay? Federal Reserve, okay, calendar, all right? That's not what I want. This one is what I want. All right. We have 4 meetings a year by the Fed that are very, very important. And they are the ones with these little asterisks here. Last one is in June. September has a little asterisk to it. December has a little asterisk to it. Now, these asterisks are meetings, if you look closely, where the Federal Reserve releases its economic projections. Everyone has a statement. Everyone has a press conference. These little asterisk meetings are the only ones where they release the economic projections. These are the most important meetings of the year. They are the most important meetings of the year because, first off, a lot of work goes into producing these economic projections. So when these are the meetings where the biggest changes are generally made. And that is why everyone is zeroing in on this meeting in September. Now, some of you may remember, some of you may not remember, but first off, we have not had an interest rate cut from the Federal Reserve at all this year. But this is not the beginning of the rate cut cycle. The rate cut cycle actually began last year, if you remember, in 2024, in September 18th of 2024, they cut interest rates for the very first time. And for those of you that are my friends here who know what was the size of the interest rate cut last year in September? What was the size of the first interest rate cut in September? Do you remember? The first interest rate cut they made was at one of these asterisk meetings, which is why it's so important. That is why the asterisk meeting today is so important. Okay, well, how do I get back to? Because this is when they prepare all their work to justify their interest rate cut. Very good. Many of you attended me on Monday. You will remember 50 basis point rate cut, my friend Howard, and the environmental berry getting it spot on. So that is why people think that they didn't really think that was going to happen in July. They really thought that was going to happen in September because it's an asterisk meeting. And in the asterisk meeting, we get two things. We get the economic, we get the dot plot, and we get the economic projections. So how the markets move today will depend upon how things change from this report here. So the first thing is page 2, okay? Lots of funny numbers. You don't need to worry about this. It's important, but on X, and I encourage you to follow, not me, because I'm not going to be tweeting it live. I encourage you to follow or just go to Financial Juice. They will have the updates the quickest. So if you want fast updates, follow Financial Juice, have that up on your X feed. So they will tell you how these economic projections change. But I mean, honestly, growth is probably going to be weaker. Unemployment is probably going to be higher. Inflation is really key. Whether or not they think inflation is going to be higher or lower and changed. That is important, but it will not be as important as this, which is the dot plot. The dot plot, you know, Sean, if you don't want to be here, you don't have to be here. I mean, seriously, you can leave, all right? But clearly you're still listening too, right? Anyway, we're not going to give the haters any more minutes. So this was June. So June, remember, I'm going to teach you how to look at this dot plot. The dot plot, each dot represents one vote from the Federal Reserve members for 2025, 2026, 2027, where they think interest rates will be at the end of the year. So the only thing that you need to pay attention to is where most of the dots are. Thank you so much, Kingish. Where most of the dots are. So interest rates now are a range between 4.25% to 4.5%. So I'm going to highlight this right here. So this, it's right now, I can't highlight it, but I'm going to highlight 4.25. So all these numbers right under, all these dots right enough underneath here. So we basically have most of the dots somewhere between here and here. So right now, interest rates are between 4.25% to 4.5%. The market was pricing in 2 interest rate cuts for 2025, where we have most of the dots actually over here. 1, 2, 3, 4, 5, 6, 7, 8. So most of the dots are here. So by the end of 2025, most central bankers in June voted the majority for 2 interest rate cuts. Very important for you to remember, okay? Because that's really going to key our trades. For 2026 is even more important. Where are the bunch of the dots? Most of the dots are somewhere, I would say, around here, right? They're definitely not at 2. They're somewhere around here. They're at 1 to 2 more in 2026. So let's recap what I just said. In June, most of the Fed officials had priced in or expected 2 interest rate cuts. Then expect 1 to 2 more in 2026. So before we go back to this, explain what the trade is, I want to write this down so we don't forget. All right. 2025, most Fed officials were voting for 2 cuts. 2026, this is as of June, 1 to 2 more. All right. Now, look back here. A whole bunch of them voted for none. All right. So a whole bunch of them voted for none. So that means that the dots will fall. A whole bunch of these dots will start going over here. And all these dots will start to come down here. Okay? So you're going to see this drop. You're going to see this drop. The question is, by how much will these drop? And how much will it matter? That's the most important thing. So we know from, and that's why I showed you here, the market is pricing in December 2 interest rate cuts. So right now we are at 4.25%, 4.5%. The market is pricing in a like 75% chance of 3 interest rate cuts. 75% chance of 3 interest rate cuts. This is where expectations is so important. Market is already pricing in. Let's get rid of this thing here. Hold on. The market is pricing in 3 for 2025. So if we drop from 2 to 3, the reaction is not going to be huge. If we suddenly drop to 4, if the dots drop to 4 for 2025, sorry, I'm an idiot. It can only be 3. So basically, because we only have 3 meetings, although I'm not an idiot, because they could do 50 basis points at any meeting. They could potentially do 50 basis points in December. But let's say they stay most likely at 3. If for some reason we have some people voting for 4 in 2025, and we have a whole bunch of dots going there, and then that would be very dollar negative. But I don't think that's going to happen. So where the key is going to be here. The key is going to be 2026. All right. The key is going to be in 2026. Are we going to get what is it priced in right now? Which is, is 2026 going to show 2 more, or is it going to show 3 or 4? If it shows 3 or 4 or 5, depending upon how many we show, which I think is going to be, this is what I think, between 4 or 5. That is going to be very dollar negative, very gold positive. And I'm going to break this all down for you in more detail later. And very stocks positive. So the dot plot is the third thing that you have to watch. And so it's going to be summarized for you in like financial juice. They're going to say pretty quickly that the market is pricing in X number of rate cuts in 2026. That's what we care about, which is how many rate cuts do we get in 2026? That's really the number one question here. Okay, and then number 4. The 4th thing we're going to watch is, of course, Powell's guidance. Yes, I will explain this. Glad to be here. Is Powell's guidance. What is Powell's guidance going to be? Is he going to confirm all this stuff here and agree with it? Is the dot going to show, like Kathy thinks, maybe 4 or 5? Probably 4, I think. And is he's going to say, other Fed officials think this, but I don't think that may be true. That is going to be the number one. That's the 4th thing that you're going to watch for. So going into FOMC, there are 4 things to watch for. Number 1, how big? There's actually one more. But as I said, we don't really care as much, but it's still important, which is economic projection change. So there are 5 things to watch for today. Number 1, how big is the interest rate cut? Number 2, how many people, this is one of the most important things, voted for 50 basis points. Number 3, what does the dot plot say? Give you extra things for 2026. Number 4, what does Powell say? Whether he confirms all this or not. And number 5, what is the no one cares about growth or unemployment rate, but it's really going to be the CPI, the inflation projection. All right, now let's talk about the trades. What are the opportunities? Before I do that, I want to show you what the market did in September of last year, because that will explain to you why sometimes the most obvious choice is not the right choice. So pretty much 1-year anniversary of the last interest rate cut. The last interest rate cut in 2020, not the last interest rate cut, but the last time they started the interest rate cut, September 18th, 2024. So 50 basis point rate cut, huge move at the time. I'm going to use this chart so that I don't screw up the notes that we took. Let's get rid of my zip indicator, which I use for trading, for fundamental trading. Okay, September 2024. We had a huge interest rate cut. Well, you know what? Pop quiz. All right, September 2024, before we look at the charts, do you think on the back of a 50 basis point rate cut, did the dollar rise or fall? Drop your answer. Did it go up or go down, the dollar? Did the dollar go up or go down in September 2024 when the Fed cut interest rates by 50 basis points, which was much larger than they expected? Okay, September 18th was our day. Ooh, look at this, my friends. All of you say fall. And yes, it did fall initially. But look at that. What was the right trade? Was the right trade to sell or to buy? Well, if you're a swing trader, definitely not to sell because we had a beautiful move lower. And even looking on an intraday basis, I'm going to let you mull on that while I go to September 18th, Fed day. All you guys are saying buy now after I showed you the chart. Oops. Actually, no, I want to go to the 15-minute chart because we're traders, right? So we're going to look at the price action for the 15-minute chart. September 18th, where are we? September 18th, we're almost there. Okay, it's going to be somewhere around here. And it's obviously there. Okay. Look at this, 15 minutes. All right, let's dissect this. Where's my right here. Here we are. All right, 2 o'clock rate decision. Surprise interest rate cut by the Fed. 50 basis points, much larger than expected. 150-point move lower in dollar yen. So, and how long did this move last? We had about 30 minutes of opportunity. Probably a little less, between 2 and 2:30, which was when Powell was speaking. We had a 150-point drop in dollar yen. So this is kind of exactly what I'm talking about, which is the first reaction is going to be between 2 and 2:15. It will be the biggest reaction for continuation. And then you start to get choppiness. Between 2:15 to 2:30, that's when you get all this back and forth and people are trying to take profits, trying to, wait it out to see what Powell says. Then Powell comes in right at 2:30, he starts talking and boom, it starts to move higher. You can argue this is a hawkish cut, but this was at the beginning of a series of interest rate cuts because they cut in September, October, November, and December. Then they stopped. So his language was not as dovish as what this initial move was, but the actions that followed was just as dovish. So as traders, what should we do? And, I'm going to walk this through dollar, gold, and indices. I also did this for the last cycle in 2007, but we're running out of time. So I'm not going to show you 2007. Just going to trust me that these kind of reversal moves happen. So there are 2 ways to trade this, okay? The first way is, and all of them basically requires having a little bit of patience, right? Remember, I talked about how everything that Powell says that's important and all the questions that are asked are usually in the first 15 minutes. So by 2:45, 3 o'clock, all the important questions are being asked. So what you should do is you should wait. We should wait and we should figure out, okay, what was the high-low range between 2 o'clock to about 2:45? So we know that this is the high of the news candle. And then 2:45, we're about here in dollar yen. You draw your range in dollar yen, you wait for one of these sides to break. You don't. So the first trade you can do, and the trade that we usually do, is when we live trade, is we'll ride this initial move lower. We have to be very, very quick. In the first 15 minutes of the trade, we will ride, depending upon the significance of the move, it will ride it lower. Then we'll stop, and then you lay your ranges out, you wait for the breakout, and then you ride the rest of the move. The second thing that we will do for my BK traders is that we'll come in at the Asia session, and we're going to trade. This is the Asia candle, 8 o'clock. We're going to trade the continuation at 8 o'clock, which it does eventually reverse, but this is still another 110 pip move, which is a really, really nice move right at the Asia open. So that's the game plan, which is number 1, initial trade, first 5 minutes, then retrace trade or profit taking trade after I would say about 2:20, and then range breakout trade 2:45 onwards. All right, that's the game plan there. Now let's look at NASDAQ. All right, and let's go back to September 18th. Now, what's is interesting is that stocks and gold, if we have an interest rate cut, some of you are asking, and I'm going to type this in here. Actually, I'll go to September, and then we'll type it in. Just give me 1 second. Could I have done this already? Probably, but you know, I had to get my kids ready to get on the bus for school. So there's only so much I can do in advance, but we're almost there, okay? All right, September. If you're enjoying the session, give me a clap or thumbs up or heart while I'm doing this. Keeps me motivated. And Boris is going to hold a live session at 2 o'clock. I'll be sending you guys all the links if you registered. Where are we? Come on, let's go. Here we are. Gosh, I traded this day, didn't I? Okay. September 18th. Where are we? September 18th, right here. September 18th. Here we go. September 18th. All right. FOMC day. So I promised you I would write this. Okay. So big interest rate cuts in general, or bigger interest rate cuts expected, is dollar negative. If it's a smaller move than expected, it's dollar positive. So 2 o'clock. Where are we? 2 o'clock. This candle right here. All right. So bigger than expected interest rate cut. Bigger than expected interest rate cut is dollar negative, stocks positive, and gold positive. All right. So big move upwards at 2 o'clock, and there is continuation. And it gets a bit of volatility, but stick with it. There is continuation. Then you get profit taking right before Powell speaks. And once again, right around 2:45, we start to get two-way action. So what you do is you draw your range. You draw your range from the news events, and you wait for the range to break. The bottom of this range breaks, and you have your breakout trade to the downside. And for NASDAQ, this is huge. This is like 200 points in NASDAQ, which I think is pretty huge. So it's a pretty big move there. Now, we don't trade NASDAQ in Asia, but the way you trade is you get your initial knee-jerk reaction to the big move for the first 10 minutes or so, and then you wait for the breakout trade to the downside. Boris will be trading this with you. Now let's do this with gold. So we said that interest rate cuts is positive for gold, or it's not interest rate cuts. I want you to remember that. It's not about the size. It's not about what they do. It's about what they say they will do or suggest they will do in the future. That's why I said you have to look at how many people voted for 50 basis points and what the dot plot will say. Those are the two most important things for the FOMC rate decision. Here we are. This is gold. Gold is, pretty much hovering at record highs. This is the rate decision, 2 o'clock, all right? And once again, initial continuation. You do have initial continuation in the move. And then this is, I believe, the 245. No, this is the 245 candle. Doesn't matter. Mark the high, mark the low, and trade the breakout to the downside. So that is your game plan. So let's go back to this, all right? So we remember, I'm just looking at my notes to make sure I've covered everything. We remember, first off, okay. First off, the most important things that we look at is how many voted for 50 basis points and what the dot plot shows. I'm going to erase all this, okay? Because we're going to start again with the trades. All right. So if we get 50 basis points, surprise cut, that would be completely out of the ordinary, all right? Complete surprise. 50 basis points, surprise cut. No one expected this move. Then, knee jerk, you can sell dollars, probably will have continuation into when Powell says. Sell dollars, buy NQES, buy gold. Very easy, smooth trade. Now, if the dot plot stays at 2 cuts this year, and we have almost no one vote, only 1 or 2 vote in favor of 50 basis points, then it's less dovish. We will probably have a dollar rally. So just because they cut interest rates doesn't mean it's going to fall. NQ was probably fall, and gold will probably fall if the dot plot only shows, if nothing changes, 2 cuts for 2025 and 2 cuts for 2026, 2 or 3. All right. If the dot plot shows 3 cuts 2025, still 2 to 3 for 2026, that's going to be mildly, just a little bit. You're not going to get big moves. Mildly negative for dollar and positive for stocks. I wouldn't be surprised if you actually saw some initial sell-off in the dollar and then a rally, because this is exactly what's priced in. There's no surprise element here. Now, this is where the realistic surprise is here, okay? If the dot shows 3 for 2025, which is probably going to happen, okay? If it's 4, it's even better. Then we show 4 to 5 cuts for 2026, which is more aggressive than what the market expects. Then you're going to see a much more dramatic sell-off in the dollar, rally in the NASDAQ, rally in gold. This is the trading game plan for today. And so hopefully I've laid out to you what to expect and what you can anticipate for today. Before I open the door up for questions, I want to share with you something I'm very, very excited about. All of you are here today because you are interested in learning fundamentals. You're interested in learning how to day trade with fundamentals, because fundamentals are not just about the big stories, the 1 year, 2 year opportunities. Fundamentals are important to learn so that you can apply it to day trading, not just Forex, but also NASDAQ and gold. And that's really what I am so excited to share with you all today, which is starting October 4th. I'm holding a masterclass, a total edge fundamental masterclass. I am doing this one time only. I'm not doing this live again. So this is the only time that I'm going to be doing this. And it's the reason I feel that's necessary is because most traders, they feel like they fail because they don't understand fundamentals. They don't know why markets really move. And they're especially confused when the price ignores news, like yesterday, when the price of the retail sales report was good, but the dollar did not end up rallying. So many traders, they struggle, they fail because they don't understand the fundamentals. They don't know why the markets are moving the way they're moving, and they're confused about the price action. They can't tell what is priced in and what will shock. I laid out for you for the Federal Reserve what is priced in and where the surprise is. But most people don't know how to do that. And most people struggle to connect fundamentals with sentiment and technicals. So what if you could spot the true drivers behind what's moving gold, stocks, and Forex? What if you could read the market reaction to news with clarity and confidence and really feel comfortable about what is moving the markets? What if you could pick the best trades by knowing what's priced in ahead of time, by knowing what is really what the market is looking at? And that's what we kind of went through today. And then with all that, build a repeatable framework to turn fundamentals into trades. That's what I'm going to teach you in this one-time Master Fundamentals class that not just covers Forex, but also gold and indices and NASDAQ. It's 10 weeks of classes, 3 months of coaching covering all of the key markets. And because it's live, it's the only time I'm going to do it. I'm not going to run it live again because it's just too much effort. And what we're going to cover, what you'll learn is you will learn the 3 pillars of market movement: fundamentals, technicals, sentiment, and how they connect. Gold, stocks, and currencies, what really drives them in week 2, like interest rates, safe haven flows, stocks. You will also, in week 3, we're going to talk about economic data that shakes the markets and how they really impact gold, indices, and Forex, and how to find the trades. Week 4, we're going to talk about picking the right times to enter and exit, what the correlations are in the markets, and some of the risk foundations to understand. Week 5, we're going to look at fundamentals and sentiment and really weave in all of that into action. Then week 6, we're going to go back to Forex specifically, and we're going to talk about each of the unique personalities and characteristics of each major currency. Like for example, CAD, you may or may not know, usually outperforms its peers when the dollar is doing well, or underperforms its peers when the dollar is doing poorly. That's part of the things that I'll teach you. Week 7 is technical foundations, some of the most important things that I look at on a technical basis and the indicators that I use. Week 8 will be technical strategies for every market. And if you're interested in learning more about what this is, you can scan that QR code. But I'm going to teach you my favorite trading strategies. Week 9 will be about trade management, how to position sizing, and trader psychology. And week 10, it's about scaling your account and choosing the right instruments to trade. So we're going to cover all of this over a 10-week period. And by the end, with your new total trading edge, you're going to learn, you're going to learn step-by-step framework to trade fundamentals with confidence. Skill 2, you're going to learn how to anticipate market reaction like we did today. Skill 3, you're going to learn the ability to filter out the noise and focus on what really moves the price. And skill 4, you're going to have a proven method to combine fundamentals, technicals, and sentiment, and learn how to day trade with fundamentals. 10 weeks of classes every Saturday at 9 a.m. Now, these will be, all the recordings will be posted. You can watch them. And then you're going to get assignments. I'm going to give you homework so that you actually, and it's about looking for examples on charts so you can actually really show me that you've learned. And then on Fridays, we're going to review those assignments. It'll be, kind of one-on-one. I'm going to call you guys up and you're going to show me what you learned. And then from Tuesday to Thursday, we're going to do coaching. We're going to look at the markets. We're going to talk about what's moving the markets. I'm going to answer your questions. So it's a lot. We're going to be with each other from Monday to Saturday. Now, Monday is our usual Monday market buzz, but it's something almost every day. And that's why I'm doing this live one time only. After this, the classes that start on October 4th, I am never doing this again to the degree that I'm doing it this time. So after October 4th, after these series, this cohort starts, there will be no more live classes on Saturday, no more 3-month coaching, no more assignment reviews every Friday. So this is your one and only chance. Make sure you scan this QR code if you want to get more information. And for the next 48 hours, there's a very, very special offer. After 48 hours, this price is going to increase. So fundamentals for every market, that's what you're going to learn, how to day trade with fundamentals. And for the next 48 hours, it's it's very, very affordable for everything that you're getting, which is 10 weeks of lessons, 3 months of coaching, interactions and sessions with me pretty much every single day. So you're going to get a lot from there. So claim your spot. This is your only chance. Register now. Spots are limited, and you will learn how to turn fundamentals into opportunities and build an edge that lasts a lifetime. So if you're interested in this special offer that's only valid for the special price that's only valid for the next 48 hours, scan the QR code. And I really look forward to teaching you everything that's in my head as much as possible over a 10-week period. So if the hours don't work for you, everything will be recorded. And, we can probably even organize some time together and work on this and answer your specific questions. But I hope you guys all join me. Like I said, I'm only doing this once live, never again, because it's just too much effort. And so make sure you register in the next 48 hours. You'll get the link over email as well, because this is a really, really great deal. So questions, any questions about this, Dr. D, this is my fundamentals masterclass. This is not what Boris is doing. So I have a question. With interest rate cuts, why does gold rally with interest rate cuts? Isn't gold used as a hedge? Well, first off, gold is priced in dollars. So oftentimes gold will move based upon how the dollar moves. Also, gold is a reflection of how people feel the economy is doing. So the Fed is probably going to cut interest rates more aggressively because the economy is not doing well. And therefore, people hedge in gold as well. So, those are all things that we talk about and try to really get you to learn. So this is the first time I'm doing this masterclass, one time and one time only. So make sure you register. It's a lot that we're going to do together, and I'm going to do my best to try to help make sure that you understand everything. Okay, I also promised you that we will have a live session at 2 o'clock. Boris is going to be live trading at 2 o'clock. I'll be joining him for a little bit of prep, so you can join us there. The link will be sent to you, but we're also streaming on YouTube as well as X, so you can join us. I'm not sure exactly. It's probably going to start 1:45, 15 minutes before. And then we'll just see what the Fed does. Boris will be trading NASDAQ and gold with you. If you're a lifetime member of BK, you do get this, Omar. But if you are just a regular monthly member, this is a very special live class I'm doing, so that's not included in your membership. All right. Thank you so much, guys. And thank you so much for joining me. As I said, make sure that you take advantage of this, because after the next 48 hours, the price is going to increase. And so, definitely take advantage of the early bird pricing. Classes begin October 4th. This is the only time, if you know, this is the only time I've ever done this. And this is the only time that I will do it again live, because it's just far too much work. But otherwise, have a great day. I hope you learned a lot. Give me a thumbs up if you liked, if you learned something. And good luck to everyone for FOMC Day. And I will see you, in the coaching sessions. Go ahead, Tyler. You had a question? I have maybe another minute before I've got to leave for my doctor appointment. Go ahead. I'll hang out for another minute or two. Write your questions in. Thank you, Bernard. Thank you, Bob. Thank you, Cheryl. Thank you, everyone, for joining me today. I'm so glad you found this session valuable. All right. If you're not typing in questions, I'm going to say goodbye. And okay, great. I will see you all in the markets. Have a great day. Why do I not trade pound yen? It's because the volatility and the movements are too big. And so I have very precise stops. And usually they're not very big stops. And pound yen is like the Google of the NVIDIA of the markets, where it just goes crazy. So I don't, the volatility is too high for me. If gold is rallying during FOMC, what impact does this have on dollar? Okay, very important. And part of the things that you'll learn, dollar leads gold, gold does not lead dollar. So it's the dollar that drives gold, and gold does not drive the dollar. All right. Thank you so much, everyone. I will see you. A lot of people asking about dollar Swiss. What should we expect for dollar Swiss? I mean, it's a dollar trade, Ephraim. Dollar Swiss is at the lower right-hand corner of the chart, so I don't like it as much as dollar yen, because dollar yen was in the mid-range waiting for a breakout. Dollar Swiss with a lower right-hand corner. So unless we have an upside surprise, if we have an upside surprise, dollar Swiss is a good trade. But if it's a downside surprise, there's only so much more room to the downside. So, and yes, the Swiss franc and gold are correlated as well. All right. Thank you so much. I've got to run to my doctor's appointment. I will see you all in the markets. Have a great day.